Hello, friends. Today we're taking a look at Ameren Corporation, ticker symbol AEE. It's a utility company, and we're going to be looking at the last 5 years' performance of the stock, as well as we'll be looking at the analyst projections on price. We'll discuss a little bit of the current news, look at the last earnings and the upcoming earnings. Also, we'll be jumping then to my Excel sheet and look at the last 10 years of revenue, earnings, free cash flow, operating cash flow, book value, also looking at the debt levels, dividend history, and try to find a fair value. Welcome to Money Talks with Martin Reyes, where we learn to take care of our money and find great companies at great prices. If you like the content that we are producing here, please leave a like and subscribe to your YouTube channel or to the podcast that you're listening to this episode and you found this video. And I really appreciate that, all the support. So let's jump into the basics of this company. In the last 5 days, Ameren is down 2.4% in the last month, almost 5%. In the last year, almost 20%. And then in the last 5 years is up about 4%. One of the things that happened last year to a lot of utility companies is because of the growing interest rates and because they have a lot of debt. A lot of these companies experience their stock value going down. Now, however, with things normalizing here in the United States, we're looking at the possibility, or at least the analysts are thinking that in the next 12 months, Ameren could go back to the highs that they experienced somewhere around $84, which is kind of where it stood from 2021 all the way to 2023. Utilities tend to be a little bit cyclical, and so one of the things that people love about the utility companies is that they are really good if you're in that stage of investing in which you just want income. So once you retire or something like that, Ameren pays $2.52, which is almost 4%, well, 3.7% dividend. And they will be reporting earnings on February 22nd. One of the things that happened to Ameren, so Ameren, it's a utility company that services most of southern Illinois and Missouri. They also, one of the things that they also do is they do transmission, and some of those maps of transmissions go all the way to Michigan, Indiana, all the way to Wisconsin and Minnesota. And so one of the things that it happened to Ameren is that Ameren, they're a regulated utility, which means is that they cannot charge more than whatever the government tell them how much they can charge. Like, they have to be approved by the government. So a couple of months ago, don't remember when it was, the government of Illinois told them, well, actually, we probably could see it here in the chart. You can just see when it dropped, because I used to own this company. Actually, I bought it when it dropped. So you can see right there the big drop. It was somewhere around December 13. They announced that they rejected the price hikes, because they thought that it was too much. So that created for Ameren, I think is Wisconsin Electric, and another one to drop, because they have to redo all of the plans, and probably they can't charge as much as they were expecting. Last time that they reported was on November 8th. They beat expectations with an EPS of $8.87 with 87 cents. In February, they're going to be reporting again February 15, and they are expected to not only the revenue to go down to 2.2 billions, 2.03 billions from 2.6 billion, but also their EPS, it's going to be very, very low at 61 cents. Now, if we were to look at last year's, their actual was 63 cents and their consensus was 57 cents, and this is normal because of the cyclicality of winter over here and summer. So they mainly focus on electricity. So around here, gas is something that a lot of people use. So with that said, let me just jump into the Excel. But before we go there, just to remind you, I'm just a YouTuber. I'm doing this for educational purposes. Please don't make any decisions based on my comments or thoughts. This is not a financial advice. So let's just review the last 10 years in revenue. As you can see, it has been very flat. There was a little bit of hike of revenue in 2023, but mostly have stayed between the $24 per share, sorry. When it comes to earnings, they have been growing those earnings, and in the last 10 years, it has grown 14%, and in the last 5 years, a 5.7%. This is a good growth for a utility company. It's actually pretty impressive for them to have that because, like I was telling you before, they cannot charge anymore. So that's why revenue is always going to be somewhere close to inflation or normal inflation. The government is not going to let them grow. So what they have to do is they have to improve their margins and they have to reduce costs. So this is very impressive for 14% and also profit margins of 14%. When it comes to free cash flow, the free cash flow in utilities are going to be always negative because of so much depreciation that they have to do. They have a lot of buildings and equipment and stuff like that. So that's why normally most people try to use operating free cash flow. And the operating free cash flow has been staying also flat, somewhere between 3% to 4%. When it comes to book value has been growing somewhere between 6 to 5%, and 4.5 in the last 10 years, 6% in the last 5 years. Return on invested equity, 10%. That's pretty good for a utility company. Once again, they don't have too much room to work with, so that's why utilities are. If you are trying to grow, if you're like me, a little young, trying to grow your portfolio, probably a utility is not going to be the best for that. If you're retired or you're looking for income, then utilities can be a good opportunity. Return on invested equity, like I said, is 10%. Return of assets is almost 3%, and return on invested capital is 5.3%. Dividend has been growing at a 4 to 5%, 4 to 6%. Payout is at 57%. Debt is a little high. This is actually not as high as I was thinking that it was going to be. Here we're not using free cash flow, but we're using operating cash flow. So it will take them about 6 years to pay for that. But their debt continues to grow, which is not unusual for utility companies. Shares continue to grow too. This is something that also utilities and REITs, they tend to do whenever they either need to grow or acquire. They either go into debt or they issue more shares. So in the last 10 years, it has grown 0.7%. In the last 5 years, they have expanded a little faster, and they have issued about a 1.4% of their shares. Analysts are thinking that they might grow at 6% in the next 10 years, which is in line with some of the numbers that we have been talking about here. So before we jump into valuations, once again, this is just my opinion, but the way that I'm looking at Ameren is more of a recovery play, because I wouldn't hold it forever, for 5 years, 10 years or something. It's not a long haul, but maybe I do agree that after they fix some of the issues with pricing, they might be getting back to and interest rates start going down. They might be going down to go up to the $84. But let's see if that's what evaluations say. Whenever we look at the multiple valuations, we're looking at prices somewhere between 84 fair price of $84 to $97. Payback, I am using here operating cash flow, and it will give me somewhere between 167 to 206. I'm probably not going to use this one. When it comes to discounted earnings valuation, growing at 5.5%, we're looking at a fair price somewhere between $54 to $63. And owner's earnings valuation, it's all negative because of how much of the CapEx. So we're not going to be using that. So a fair value of based on what we're looking at here will be, I think, somewhere around $85, the average. So if we were to take a 20% margin of safety, that put it at 68, which right now that's what it is at. So a 20% margin of safety will give you $68. If I were to jump into this company, I would probably do it as a trade, as maybe no more than 18 months. And if in 18 months they're now back to above $84, then I probably just sell and take whatever loss or whatever it is. So that's my opinion. If you have any questions and comments, please leave them in the comments below. If you would like to get access to this Excel sheet, you can get it at buymeacoffee.com. The link is down in the description. Hope to see you in the next video, and have a nice day.